We first identified the property in 2020.
Yes.
Okay.
Right, after looking at several other properties
Yes.
and dealing with other developers who were not nearly as responsive.
And you made this investment because you wanted to live here, or as an investment, or
As
a...
investment and for the golden visa.
Okay.
So we now have a Portugal
And we wanted,
residency visa.
and we wanted
Okay.
to live here. And
Yeah.
it's a lovely country with lovely people.
Or did you look at any other European
no.
programs?
We chose Portugal.
We chose Portugal, but we looked at Spain,
Mhm.
and we looked at Greece and Malta. Malta was way too expensive, and it was just this tiny little place that we didn't actually want to spend time in.
Yes.
And Spain only really is practical for people with a heritage in that country, and we didn't want to learn Greece and Greek in
There's
Greece.
a reason why we say that sounds like Greek,
And
right?
Portugal, also the people are really accepting and loving. So
Yes.
that's why Portugal, really.
Well, thank you so much. Thanks for showing me your beautiful apartment and taking the time. I really appreciate it.
Yeah.
Thank you for meeting me in beautiful Porto. This is a lovely street, Santa Catarina. One of your projects is in this street, isn't it? One of the completed projects.
Right in the top of the street.
Excellent. We'll go have a look at that a bit later. Can you tell me, just for starters, a little bit more information about the company? Where did it all start for you?
So Impacto Capital is a real estate developer. We have done several projects throughout the world. We started in North America, South America, and then in the last 8 years, relatively since 2014, we came to Portugal. We decided to set our operation also here. In these last 8 years, we have successfully completed 8 projects, and now we have 6 projects ongoing. So a lot of stuff going.
So a total of 14 projects. That's a pretty good track record.
We saw the market, and we saw that there was a big shift for many players to the venture capital industry, and we also wanted to get a piece of the action. And we saw that all the offering that was currently in the market, it was very similar despite being technology, agriculture, real estate, medicine, whatever, the investment structure was pretty much the same. So we wanted to create an edge, a differentiator compared to what the rest of the market was, and that's why we created the Impacto Fund with a very unique investment structure.
What is that investment structure when you say it's unique? Explain that to me.
So basically, as I said, the majority, or from what we understand, all the funds are performing investments through equity. So the fund raises the capital from the investors, and then the fund will buy equity into the companies that they will invest into. So basically, this makes the fund an active shareholder of those companies. If these companies perform great, that's really good for the fund because the fund will benefit from that. But if those companies underperform, the fund will have a problem. So what we propose to our investors is capital preservation. And it's really hard to provide capital preservation with this type of structure. So what we bring to the table is a debt structure. And this is unique because the fund has 3 major advantages in protecting our investors' money. The first one would be the priority of the cash flows. So
the fund has the first right of cash flow.
Exactly. The fund is in the first position to be repaid back. Prior to the company pays any dividend, prior to the company pays any taxes, the company's first responsibility is to repay the debt with the fund.
Okay.
The second one would be the interest. So we are going to pay an interest on the money that the fund lends over to our companies. It's a completely different level of commitment to just an expectation or a possible target that other funds hope to achieve. And the third one would be, and for me this is probably the most important one, would be the collateral. So all the investments that the fund performs into our companies, they are backed by a physical asset. And it is the fund that determines the value of this asset. This is how the fund protects himself. We give the fund the possibility of investing into our company, which by itself owns the asset, and this asset is provided to the fund as a collateral, so that the fund says, okay, I'm going to give you this money, I'm going to lend you this money, but in return, I keep the asset from my side until you repay the debt.
Okay, so that's how you protect the capital
Exactly.
of the investor. So rather than a promise of a
We
future
hope
asset.
to achieve something of this magnitude. No, the fund already has the asset on its side, and at a really low valuation, clearly under market value, and this is how the fund protects himself. Because if let's say the fund, let's talk about a 8 million euro project. If the fund lends me 8 million euros, the fund exposure is big, because if the market goes under the 8 million euros, the fund starts to lose money. So what the fund does is that they provide lower valuations. So if the market dips,
Okay, so they would value at 6 million, for instance, instead of 8.
Exactly,
So you've
exactly.
got a cushion.
like a bank could do. So if you want to do a bank finance, the bank always cuts your legs on the valuation,
Yes.
and then they will lend you a percentage of
But
their.
when the taxman comes to collect, they value you at a higher
Exactly.
price, don't they? So how do you pay a yield to the investors, or what is your yield or income?
So we have
proposition
a
for
minimum
investors?
target of 3% to our investors, but we are seeing our projects performing above expectations. So the expected target to our investors is 5%.
Okay, that's just on the yield, not that excludes the capital growth, potential capital growth.
So the minimum return that the client is going to get from the debt will pay them to the investor 3%, and then anything above that will be with the upside of the projects. So that's why we are expecting to pay the 5% return to our clients.
The developer couldn't have planned this interview today better had they tried. While we were in the apartment viewing the finishes, one of their existing investors came in looking for him just to say hello and to thank him for the service. So we managed to get a quick interview with them. So it's always interesting when you speak with people that have actually already invested in the product and is actually living there. So earlier in the day, he mentioned that there were some people investing in the building that actually end up using the apartments themselves, so they don't use the integrated management services. So meeting Brian and Ellen was really interesting. They're from the US. They bought the apartment sight unseen. They moved there with their mom, who lives there most of the time, and they seem to just be tripping in and out. So it's very interesting from their point of view to see that they could buy it sight unseen, that they were happy with the product, that it was delivered on time, that the finishes were high quality. I think it's a little bit sad, though, that people are so surprised that the product quality is good in Portugal. It seems to me to be an indictment of maybe the level of service that people are expecting to get. So it was really interesting to speak to somebody that was so obviously so excited about the investment that they made, and what a beautiful view they have. So tell me a bit more about Brian and Ellen. How did they find you?
So they came through a partner of ours, and they found the unit back in 2020, right in the beginning of the pandemic. And at the time, the building was still under construction. What we did, because they were in the United States and the borders were closed, we were not allowed to travel. So what we did with them was a video call. Yeah. I showed them roughly how the layout was going to look like, and they fell in love with the view of the apartment, because it has a lovely balcony, that unit. After almost 2 years, they came here to see the final product, and they were pleasantly surprised. They told us that it was above their expectations. So we have just arrived to Marquesa Palace.
This one here?
Yes, this is the building.
Okay.
It's a building from the 15th century, 1486, the first registration that we found in the city hall. Probably the building is older than that, but that's the last record that we have. Yes. And we are going to do 16 residential units in here. We use the lock-off concept where from a two-bedroom unit you can actually operate it as a studio apartment and as a one-bedroom apartment. The building has just started construction. Right now it's more deconstruction. We are removing the older structure of the building and we expect another 22 months of rehabilitation. There will be, where you see the tiny excavator, there will be a private garden for the 2 units that are on the, I would say, -1, because this is considered ground floor. And then we have first, second and third floor above us. So as you can see, we are on the top of the hill because you see the other buildings even from the ground floor. And as you go up, you get a very interesting city view.
So tell me about Fervenza Palace.
So Fervenza Palace, similarly to Marquesa Palace, it was also acquired in 2018. We designed a brand new project to it. It has 17 residential units, Fervenza Palace. The construction started last year in May 2021.
Okay.
And it will stretch until May 2023. We have three types of investors. So the first one would be the investor that does not want to have the asset, just wants to park their money into the fund, get an income of the fund, and by the end of the fund get its money back. The second investor is really interested on the asset itself. So he made the investment into the fund because he wanted that specific apartment. And the other investor would be, okay, I like the structure of the fund, but I also want to have the possibility to exchange my participation units for a unit that might occur.
So they leave the decision open?
They leave the decision on the open. So Fervenza Palace, it's a palace from the 18th century that is being fully refurbished. Inside it's a brand new structure. We just maintain the facade and the entrance hall, and that's pretty much it. So from this point onwards, as you can see, it's a brand new structure. It's a brand new building. I just maintain the facade and the entrance hall.
One thing we haven't spoken about is where does most of your investors come from? We've met one of your American investors now, but where do the rest of your investors come from?
So we have investors from all over the world, from South America, Brazil, Colombia, Chile, North America, Canada, USA, also from some clients from Africa.
Some South Africans, I'm sure.
Some South Africans, a lot of South Africans, also from the Middle East,
Okay.
Asia, from China.